Hello and welcome. You're watching First Stick here on News 9, where we bring to you the morning action on Dalal Street. Now, we have lots to cover over the next half an hour. We are in the midst of the earnings season, so we'll bring you the latest on that. But before all of that, let's also look at how the global setup is looking this morning. Amit, over to you.
Good morning, Suyash. So, US inflation data that has come has outstripped expectations in December, hitting the 3.4% mark. The economists had expected it to be 3.2%, up 0.1% from November, where it was 3.1%. The markets yesterday, Dow Jones mixed again. Dow Jones closed in the positive marginally at 0.04%. Standard & Poor 500 was in the negative 0.07%. Nasdaq was just at zero. So neither positive nor negative. Coming to the European markets, they were back in the negative, again in the negative, 0.77%, as much as that. Asian markets this morning, Hang Seng was marginally in the negative at 0.03%, and the Nikkei continues to be in the positive at 1.14%. So that's what the global scenario looks like.
Something very interesting happened yesterday. You know, the inflation print that you were just mentioning earlier, that came in slightly hotter than expected. But the US markets, they were trading under pressure, but they recovered sharply off the lows on a higher inflation print. And we saw an ease in the US 10-year bond yields. So that is kind of peculiar, because one would expect that a higher inflation rate would throw a wrench in that rate cut narrative, and that would drive markets lower, but the opposite happened. And even, you know, I'm looking at the other cues. I think the major one that we need to talk about is the surge in the oil prices. Now, oil prices, at least last night, they were hovering somewhere around the $80 a barrel mark. Now they have come down to about $78, $79. Now, this is on the back of US and UK launching airstrikes against Houthis in Yemen after the Red Sea attacks. So that is a key factor for us to track. As we know, oil prices, becomes a key factor because India as a whole is a net importer of oil, and fluctuations, at least on the higher side for in oil prices, is a negative for us, and a lot of the industries that use crude as a raw material. But very strong start to the Indian markets as well, and I think Indian markets opened gap up. Nifty in fact opened above the 21,770 mark. Now this is the highest levels that the market has seen in the past 4 or 5 sessions. So we were pretty much stuck in that range of 21,450 on the downside and 21,750 on the upside. But we have finally broken out of it, and the markets are holding on to the early morning gains. If we can pull all the numbers as well. But what's driving the markets higher, Amit? It's the earnings of the IT companies. You know, the index on the whole is up. The Nifty IT index, which contributes to about 14% of the entire the Nifty basket, that is up somewhere around 4% this morning. And Infosys and TCS, those two stocks that came out with their earnings, which by the way, we'll get to the numbers in just a bit, but broadly speaking, they were slightly ahead of what the street was expecting. Both stocks are doing very well this morning. In fact, as we speak, Infy is up about 6% or so. TCS is up almost 4% or so. So Nifty IT is providing strength to the markets this morning, and as I mentioned earlier, the entire Nifty IT pack contributes to about 14% to Nifty 50 basket, and Infosys and TCS alone, they contribute about 9.7% to that Nifty. So that is perhaps driving the markets higher, and that's why I think we'll see a good trading day where Nifty could even perhaps scale 21,800 mark on the higher side. But let's look at the results of these IT companies and how they came out. Let's start with TCS, Amit.
It's driving the mood, so to say. So it is optimism there because they surpassed expectations. TCS surpassed revenue expectations but fell marginally short on the bottom line. 2% year-on-year growth in consolidated net profits. Revenue experienced an increase of 4%. Importantly, the board has recommended a special dividend payout of 18 rupees per share and an interim dividend of rupees 9 per share. Sequentially, the revenue demonstrated just a 1.5% increase, while the profit saw a 2.5% decline. This is what I was talking about in the bottom line. TCS has attributed this decline to a one-time charge of 958 crores of rupees incurred during the quarter for the settlement of a legal claim, which had an adverse effect on the bottom line. But otherwise, it is looking good.
All right, and Infosys also reported a better than expected set of numbers. However, on both year-on-year as well as quarter-on-quarter basis, we saw declines across all metrics. Let's look at the numbers first. Revenue for the quarter, that stood at around 38,821 crore, which is a 0.4% decline sequentially. However, if we look at the estimates, at least what the street was expecting, it is about about a percent higher from those levels. In fact, 1.8% higher than what the street was pegging the numbers to come at. Revenue, the net profit, that's as far as revenue goes. The net profit for the quarter gone by stood at around 6,106 crore, which is about a 7% decline compared to the September quarter. But the figure is about a percent higher than what the street was expecting. Operating margins, they declined by about 70 basis points, again on a quarter-on-quarter basis, but they were also slightly ahead of the street's forecast, which was pegging it at about 10, it's higher by about 10 basis points or so. Now, if you look at, the other metrics as far as Infosys goes, the deal wins, let's talk about that first. Deal wins stood at about $3.2 billion in the quarter gone by. Now, 71% of that entire TCV value of 3.2 billion came from new contracts. So that is a big positive for the company. And in the September quarter, Infosys had a deal wins of about $7.7 billion. But remember, we saw multi-year contracts being signed in the September quarter, and we did not really hear much about the deal wins. In fact, if you remember, we did hear about the termination of an MOU which was worth about 1.5 billion from a global client. Infosys did not comment much on it. But overall, the brokerage, it was the deal wins, the total TCV value was also ahead of what the street was expecting. They were expecting a figure of about 2.5 billion or so. Now, the board of TCS, Infosys has also announced a definitive agreement to acquire InSemi, which is a leading semiconductor design and embedded services provider, for a consideration of about 280 crores. And among positives was also a decline that we saw in attrition rate. Now, the attrition rate declined by about 12.9% in the quarter gone by. Voluntary attrition for the IT services company was at about 14.6%. So a good decline in the attrition rate. And if you remember, in the year ago period, it stood at as high as 24.3%. Now, what the street would perhaps not like is that Infosys has once again tightened its revenue guidance for the financial year 2024, and that guidance stands now at about 1.5 to 2%. This is also the third straight revision in guidance that Infosys has made in this financial year. Remember, we started the year with a guidance of about 4 to 7%, but there has been a tinkering over there. Now, the company has also maintained its EBIT margin, which is the operating margin guidance for financial year 2024 at about 20 to 22%. But Amit, I'm looking at the stock this morning. The street seems pretty happy. They were factoring in the worst. Now, the stock is up somewhere at least over 6% or so this morning, and closely, swiftly moving towards that 52-week high, which sits at about 1,619 rupees. Currently, we are somewhere around the 1,562 mark, and at the day's high, we went as high as 1,594. So perhaps that, if the bullish momentum continues in the IT pack, then we can see Infosys taking on those 52-week high. And if you remember, in the year gone by, Infosys has been a relative underperformer compared to other IT names. Other IT stocks have rallied somewhere around 12 to 14%, whereas on a year-on-year basis, Infosys is flat. It's up about 0.2, 0.3% or so, pretty absolutely flat, in fact. But we have other earnings as well, other key earnings as well. Let's start with HCL Tech. What are the key expectations over there?
The mood has been set. There is optimism because both the first two companies who announced their results first surpassed expectations. The stock of HCL today is also up over 3%, almost 3.2% right now. Beating the seasonality issue, this IT firm, HCL Tech, is expected to put far better performance than its peers So it is expected to perform better than all other IT companies in the December quarter. This is because this season is always good for this company for the products and services this company offers. The company is expected to report a 5% sequential rise in consolidated revenue to about 28,000 crores. Net profit is expected to increase almost 7% to 4,085 crores roundabout. On an year-on-year basis, the top line is expected to rise 4.7%, while the bottom line may drop marginally by 0.3%. Just that amount. In constant currency terms, HCL revenue is expected to grow 4.6% sequentially in the quarter gone by. So that's as far as HCL goes. They are expected to do better than all their peers as an analyst expect in the IT stable.
All right, and before we take a break, let's also look at how Wipro is expected to come out with its numbers. The numbers come out in the post-market hours, and after, as you also mentioned, after a better set of numbers posted by both Infosys and TCS, Wipro and HCL Tech are also expected to follow the suit. However, going by the estimates, Wipro's US dollar revenue growth could be the weakest among the peers, and this could be on the back of weakness in the BFSI segment and the high-tech segment. Now, the Bengaluru-based company's constant currency revenue could see a decline of about 2.7% sequentially, and if that happens, this will be the fourth straight quarter of decline in revenue for the company. Now, among other metrics, the street is also expecting margins to be weak due to wage hikes that took effect on December 1st. And as per estimates, operating margin could see a 90 basis point dip compared to the previous quarter. Now, what are the factors that will, the street will be keeping an eye on? In the past quarter, Wipro didn't announce any big deals which might impact the overall TCV value, the total contract value. Investors will also be interested in knowing if the company is reducing cancellations of its discretionary program. If you remember, Wipro is also facing challenges with its senior leadership departures, including the recent resignation of Chief Growth Officer Stephanie Troutman. Now, reports also suggest that there is dissatisfaction from Azim Premji with the state of affairs of the company. So, any commentary around that will also be eyed by the street. Additionally, it's crucial for the management to also explain how Wipro plans to achieve, its 17% margin goal. But looking at the stock, in the last quarter gone by, it has moved in line with Nifty IT. Nifty IT gave returns of about 11.7%. The stock overall moved about 12% in the quarter gone by, but has been a relative underperformer. Even this morning, it's doing pretty well. It's up about 3.77% or so. So we'll keep a close eye as to what the numbers look like and what the commentary coming out from the management would be. But with that, let's take a short break and we'll be back with Business Plus on the other side.
Since the last 2 years, Khalistani terror groups are threatening Indian diplomats in Canada, US, UK and Australia. Investigations of these threats led us to the first ever abduction and killing of an Indian diplomat, Ravindra Matre, in UK's Birmingham in 1984. Our months-long investigation finally led us to the murderer of Ravindra Matre, who has been hiding in Pakistan-occupied Kashmir for the last 40 years. Watch our exclusive documentary, Murder of an Indian Diplomat, where we reveal the man who killed Ravindra Matre.
Stop searching, start streaming. Download the world's first news OTT, News 9 Plus, ahead of the curve.
Bangalore traffic is an example of something that has gone wrong with our system.
We have more than 50 flyovers in Bangalore city. If flyover is a solution to traffic problem, Bangalore should not have traffic problem.
According to TomTom Traffic Index 2022, Bangalore is ranked as the second worst city in the world when it comes to traffic.
The speed limit at the ORR is 80 kilometers per hour, but our vehicle has only moved 10 kilometers per hour.
What Bangalore needs is a surgery, but what we have been offered repeatedly are band-aids.
Only on the world's first news OTT. News 9 Plus, ahead of the curve.
How do you fulfill that promise? Because ultimately expectations have to be met.
What certainly comes across is the lack of political will.
If you look at the political landscape, is it really changing for women, or the women reservation bill will need to be the needful?
Without any reservation, the women can fight.
And the gang issue is at the heart of it. And what is the inability of the forces that dead bodies surface, but not the living people?
Hello and welcome. You're watching Business Plus. In this very special edition, we are speaking with Andrew Holland, CEO of Avendus Capital, joining us live on the show. Andrew, good to have you on the show. Thank you very much for taking time out. And it's good to have you back, actually, after 2023 for the very first time on Newsline Live. I want to begin by asking you, sir, what is your outlook for 2024? The markets have, in fact, done well, not exceptionally well, but have done well at the start of the year. And you actually talked about that. You hinted at that in 2023 when we had our last conversation. What sense are you making of the markets going forward, sir?
Well, I think we're all hoping for more of the same, right? So, you know, for most of the year, the kind of market last year, the Nifty was only up 7%. It was only the last 2 months, the Santa Claus rally that we all had, which got us to where we are today. And that's followed through to some extent. And I think that, you know, we got into a little bit of overbought coming into the year. And that's, you know, I think we're probably going to trade in a range a little bit. But the good news now is that with these IT results coming out, I think the market's going to say, you know what, those results weren't so bad. And we think it only can get really better from here, because if interest rates are falling globally, it's good for tech stocks, and you get that extra tailwind, you know, throughout the year. So I think with that, and obviously the recent kind of surge in the Reliance share price, kind of bodes well for the market to start thinking. I think earnings are going to be okay. I think we've got the catalyst to kind of move the market towards that 22,000 Nifty. The only sector which is kind of still playing spoilsport to some extent is banking. Yeah, but maybe there's a bit more confidence now with these IT results. Again, just giving the market that kind of extra step in terms of trying to push higher. Lots of things out there which are risks, which I'm sure we'll talk about. But I think in the very short term, I think the market has the momentum now.
All right, and since you talked about a plethora of sectors as well as the IT results that have started pouring in, Andrew, of course, not too bad when it comes to IT, Suyash, is it? The IT results for Infosys TCS out at the moment, and the preview, apart from what the preview was, the results have been in line with the preview, in line with the expectations. The stocks as of this morning are up.
Yes, Shweta, absolutely. And you know, I think the street was overall factoring in the worst, and the numbers came in slightly ahead of what the, you know, what the expectations were. Although we have still seen a decline on both sequential as well as on a quarter-on-quarter basis. But, you know, early morning on Friday, we saw a big surge in IT stocks. They are up somewhere around 4 to 6%. Andrew, coming to you, what's leading to this exuberance?
For the IT stocks, I think I think everyone had a negative view. I mean, we've been saying that, listen, the valuations were okay, but obviously the guidance has been weak. The kind of outlook was weak, and they all came in with results which were slightly ahead of the kind of more pessimistic scenarios. And again, I think everyone's thinking now that, you know, we're probably hit towards the bottom. It's not going to get worse from here. Let me put it slightly differently. Let's talk about the inflation figures in the US yesterday. So they were higher than the market expected. But the market say, you know what, we're going to get rate cuts this year. It doesn't matter. It could be March, it could be June. And I think that's the feeling now with the IT sector, is that you're getting towards the bottom. So from here, it's going to move higher in terms of demand, in throughout 2024. So we're through the bottom. Results weren't so bad. So now it's a sector which has been slightly unloved for some time. But now you have the momentum to push push the stocks higher. I'm not saying that you're going to get upgrades to earnings, but I think that's the next stage, probably in the first half of at the end of the first half of this year.
And as far as the top 4 or 5 IT companies go, your Infosys, TCS, HCL, Wipro, what would be your pecking order?
It's difficult for me to talk about the individual stocks in terms of pecking order, but I think it's going to be initially led by the large caps, but you'll get the mid caps as well starting to probably outperform in the second part of the run up in IT stocks, what I would see. But I think the beaten ones down has been the large caps. I think that's where you're going to see the the kind of very sharp moves which you're seeing today, because there's been too much pessimism.
And talking about the inflation print, the headline inflation print that came out on Thursday for the US, that came in slightly hotter than what the street was expecting. Now my question is, how does that factor in that entire rate cut narrative, and by how many rate cuts and by how much quantity you as a group are factoring in for the US this year?
So we're factoring a minimum of 100 basis points. We're also factoring in there that March would be the first time the Fed would reduce rates. Now, data is showing that could be pushed a few months in there. But what the market's saying is that actually not what the market's saying. What the Fed is saying is that we're done. Interest rate reductions are coming. Now, how many times, how big? I think the market's factoring in at least 100 basis points. Throughout the year. So whether that's 25 in March or 50 in June, let's see.
All right. And are you expecting the central bank in India to also follow suit perhaps? And if yes, what sort of trajectory are you looking at when it comes to RBI?
So, if let's just take the view that, interest rates fall by 25 basis points in March, you could see the RBI at least do something in April. I mean, I wouldn't be surprised. In fact, we could actually be one of the first ones to reduce rates, because, inflation figures here are trending down. Commodity prices are, fairly stable. So it doesn't necessarily mean we have to wait for the Fed. But I think it's always a good signal for other central banks, including the RBI, to kind of take the lead from the Federal Reserve and reduce rates. So it'll be very soon afterwards.
All right. And since we are on the US and the impact that's going to have, let's also talk about the US-UK strikes on the Houthis as of this morning. Now, that news would be some sort of relief to people, shipping companies specifically, and the trade volume that moves through Suez Canal that has taken a beating in the past couple of days, down by about 61% past the Houthis attack. What sort of momentum, and the oil also picked up 2% just this morning. What sort of impact do you think it will have on oil prices before I come to shipping costs that have also touched an all-time high, an exorbitant price at that? But what sort of impact are you expecting on oil?
So we'll have to see how if it escalates at all. I mean, obviously it's a worrying time, not just for obviously the shipping routes, but also for inflation. If the oil price does rise a lot more, but it's not been a big rise, right? It's really just recovered some of the losses it had prior to this strike. So it probably tells me that the market's still saying it's okay. There's nothing to worry about right now. I think the problem for inflation will probably lie more towards Europe than it will anywhere else.
Okay.
A little bit in the US, but more towards Europe. So, there was a feeling that the European or the European Central Bank, the ECB, could do rates again quite quickly. This might delay it if this problem in the Suez Canal continues.
And what do you think would be the impact for us? Because at the end of the day, we are net importers. We depend on a lot of raw materials for at least heavy industries as well as oil. overall, what do you think, if the crisis persists, what would be the impact for the Indian economy?
So obviously it will have an impact in terms of raw material prices, kind of increasing for the input costs for a lot of industries. So that would be the first fear. The second, obviously, more importantly, is that our exports might slow down as well, because anything to Europe is going to be affected by this. Maybe not on the price side of it, but in terms of actually shipping the goods. So I think a double whammy in terms of the inflation part of importing, because it's going to cost higher cost. Now, is that going to be passed on, or will companies take it in their margins? We'll have to wait and see. But that would be the risk I see at the moment. But at the moment, most companies are not putting this into their commentary in terms of problems for them in terms of margins.
Right, and you mentioned it's going to be a double whammy for India, both imports and exports taking a beating. Exports taking a beating to the tune of $30 billion. That is the expectation if the current crisis continues. Hopefully, that crisis will now be, you would now come to a stop post the US-UK strikes on Houthis. But one of the important news stories that has in fact led to a lot of jiffy in the market, especially in cryptocurrency, is the fact that US SEC has finally given a go-ahead to spot Bitcoin ETFs. What sort of impact are you expecting, not just for the US, but also for Indians who are hoping to now perhaps invest through, maybe funds of fund or making a foray into cryptos for the very first time through Bitcoin ETFs?
Yeah, you see, I mean, the RBI is obviously, we saw the statement yesterday in terms of, their view is a little bit more negative on crypto. So I think locally it's going to be more difficult to kind of participate in this expected increase in the Bitcoin generally. But I think, you have to be very careful in terms of some of these themes that play out for Bitcoin. ETFs has been something that has been talked about, and I don't know if you noticed that the price has actually come down since the ETFs has actually been traded. So, you will get that kind of sell on the news part as well. So it's been expected for some time. It's good news for Bitcoin, but it's just an asset class which it's an alternative asset class which you would only put a very, very small portion of your funds towards, because there's other alternative assets which would be equally as good in terms of the returns over a longer period.
All right, and not a safe asset class, is it? I mean, that is the question a lot of investors would be wondering in at this point. US SEC making it very clear it's not safe. It's not an endorsement from the US. Don't look at it that way. And in fact, RBI governor also coming on record suggesting what's good for others may not be good for us. So don't venture out just as yet. Try and be as safe as you can.
All right.
Exactly. Listen, if you've got our markets which are doing so well, I would say that there's plenty of money to be made in the Indian markets rather than just Bitcoin.
Absolutely.
All right, and overall, Andrew, India has been a relative outperformer. We have been on a bull run for the last 8 years. In fact, in 2023, we outperformed most developed and emerging markets. I have two questions here. What sets us apart, one, and do you expect this outperformance to continue in 2024 as well?
See, I think there's two parts to that in terms of the outperformance. Let's take two factors. Let's take a factor which would mean that we don't outperform as we have done. And I think that is very much dependent on what happens in China. If China does a big stimulus, which brings confidence back to that property market and to investors in the property market, then I think you could see a lot of flows go towards China. It's a cheap market. It looks as though it's kind of bottoming out from where it is. So, you could see that would be a big positive for them and take flows. Not saying necessarily all from India, but towards China. So that would mean that would be a better performing market going forward. If we take that interest rates are falling in the US because there's a slowing economy, and we keep debating whether it's a Goldilocks, no landing, or it's more of a recession, and we're in the recession camp, then again, the markets will look through that and say, you know, who would benefit as the economy recovers going forward, as interest rates, you know, come down, and that would obviously be the exporters. So that would be your Koreas and Taiwans and Chinas. So I think that's the probably, you know, where you could get outperformance from those markets compared to India. But obviously, after the elections, if we have a stable government and the policy reforms are exactly as the market's been expecting, then you know what I would expect to happen is that GDP growth will start to accelerate, and that will have a multiplier effect across many different sectors. So I think earnings will start to increase, or earnings forecasts will start to increase. So our kind of base view is that earnings per share will rise by 15% in 24-25, and that's probably the kind of level of increase that we'll see for the Nifty as well. So not a bad ending in terms of the result for the year if that proves to be true.
And what's your view on the broader markets? Now, they have rallied, and how the Nifty Mid Cap 100 and the Small Cap 100 Index, they rallied by somewhere around 50% or so in the year gone by. So far, even in 2024, they have been performers in an otherwise choppy market. So can they continue to shine, and what sectors or what pockets offer opportunity in the broader markets?
So I would say that the rally that I would expect to see would be led by large caps. So because if you're going to get foreign investors coming in, they're going to go for the large caps initially. So I would say banking, IT, and metals would be the three sectors which I think will lead this rally going forward. In terms of the broader market, I think I would kind of look at themes rather than just say, you know, small or mid caps. And some of the themes obviously would be you know, not dissimilar to what we saw last year, which would be defense and renewable spending. That's not going away, that will continue. But the themes that we liked last year, I think, are still at the beginning of the runway. This premiumization in beverages, both, you know, non-alcoholic and alcoholic. We think that's going to continue, you know, going forward. And, you know, this whole spending in terms of experiences, so travel, leisure, again, is going to be a big, you know, you're going to see a lot of more spending. And with Prime Minister Modi obviously saying, you know, spend in India, I think that's getting, that's helping the cause for all the hotels and islands as well. The final sector is the electronic manufacturing sector, which again, very early days in terms of the growth for these companies, both domestically and for export. So I would look at these as the themes I would play in the kind of small and mid cap sectors.
All right. And what's your view on the banks, especially the private sector banks? Now, they have been the laggards for the past 12-15 months or so. Now, FIIs are finally back in the picture. They have returned back to the Indian markets. Can that provide a bullish pivot for the banking stocks?